Ladies and gentlemen, welcome back to the channel. Here in this video, we will be going over all of your Tesla stock breaking news today. All of your broader market news as well, but we're going to do something a little bit different in this video. I'm going to look at the options chain and we will see what Tesla stock is pricing in between now and the end of this year. I will share my expectations for Tesla stock between now and the end of this year and kind of my thoughts on 2026, although we're going to talk about that a little bit more in the next video. So this one's going to be exciting. Hit that like button and subscribe to the channel if you have not done so already. Check out that link down below in the description of this video as well for the trading community, but more on that in just a few moments. Let's get into today's episode. So the broader markets on Friday, like the Russell and the S&P, were down a lot more than what we're used to seeing. I believe this was the biggest red day for stocks since the whole, first round of tariff crash fiasco in April. Like, this was kind of a shot across the bow, if you will, for a lot of investors and kind of spooking some people. I actually love this. I think it's very healthy. I think this paves the way for stocks to move higher into the end of this year, because now we're in a situation where people are scared again. Sentiment has reset. Like, the RSI on the S&P is below 50 again. It's at 49.98, which, well, technically I think it's even below that if I can look at this correctly. I think the RSI is at like 47 something. So you're pretty much neutral, and you've only fallen about 2% from your all-time high. That means now you have a wall of worry to climb again. So what happened was kind of twofold. Trump announced additional tariffs on countries. Again, let me give you the long story short on this to save time. The only countries that matter is Mexico, Europe, China, and Canada. Canada was hit with a 35% tariff, but according to Carney, Canada's prime minister, they're going to try to get a deal done by, the next week or two. Okay, we'll see what happens with that. That's the only bit of real negative from an economics perspective that came about with that. Futures did not react much to it. It was really the downward revisions to the jobs data, okay? Well, Trump basically said those job numbers were fake. They were appointed by, or, kept up with by a Biden appointee. He fired that appointee. I don't know exactly what that means for that data going ahead, if it's going to get more accurate or not. I think the markets actually liked Trump firing that lady that runs the BLS, because everyone knows on Wall Street that the data is not very good, okay, at all. Hence the downward or upward massive revisions we've had in the past couple of years. The response rate is very low from businesses. Like, it's very bad data. They essentially take like a small sample size, couple hundred, couple thousand, positions interchanging, and extrapolate that for the whole country. Like, it's a very bad way of getting the data in the first place. So I think Wall Street was looking at that on Friday as good news, hence why stocks rallied after Trump said that right here, because maybe we start to get some more accurate data. Okay, but it was the downward revisions that caused this. Now, Wall Street is pricing in a couple of rate cuts for this year. It did boost the odds of rate cuts. Okay, September is basically in the bag as long as nothing crazy happens with inflation data. 77.7% chance of a rate cut in September, 22.3% chance of a hold. October, you're pricing in another rate cut in October, 58.5% chance, a 36.0% chance of only one cut by October, and only a 5.5% chance of no cuts by October. December, you're technically pricing in a higher chance of another cut. So you're technically pricing in 3 cuts by the end of this year, okay? Pricing in a cut in December with 43.2% odds, The odds of only 2 cuts by December at 41.9%, the odds of only one cut by December at 13.5%, and the odds of no cuts by December at 1.4%. So you're technically pricing in 3 cuts by December as the most likely outcome at this point, which inevitably will be positive for small cap companies, higher beta companies. But when you're going through a little bit of a growth scare, it's important to not get too scared, okay? The US economy does not go into recessions all too often. You don't just walk into a recession. If we were going to have a recession, it was because of the tariff shock back in April. And I don't think we have enough lingering effects from that to get a recession. I think people are back to spending. I don't think the economy has been great by any stretch of the imagination for a while, but we're kind of back to where we were before. People are not changing their spending habits because of tariffs. Like businesses, sure, they stopped investing. Perhaps they're not hiring as much today, but some of the provisions in the big beautiful bill, if you can call it that, like 100% capital expenditure depreciation in the first year of service, being able to write off car loan interest, no tax on tips, no tax on overtime. All of these things are very stimulative, let alone the massive deficit, which is stimulative to the economy. I find it hard to believe we go into a recession. And, getting a little bit of fear in markets is actually healthy, but if we get data that just weakens and gets worse, that's where you have a larger problem. I just don't see that happening. Now, also in the news yesterday for Tesla, which kind of hurt Tesla, towards the end of the day. If we look at the charts, Tesla was massively outperforming other stocks, okay? Tesla did close the day down 1.83%, but for a good chunk of the day, Tesla was like close to positive. It was only down like 0.3%. I reported on that, around 2 o'clock when I start making the videos that come out at 4. And Tesla was doing very, very well. Okay, relative to other big tech names. Look at this. Meta was down 3%. Amazon was down 8%. Apple was down over 2.5%. Microsoft down 2%. Even Robinhood down 3%. Nvidia was down 2.5%. Okay. Tesla was doing very well. What happened though is this news came out towards the end of the day that said a jury has found Tesla partially liable for a fatal 2019 crash in Key Largo, Florida, and has ordered the company to pay $200 million in punitive damages. The fact that Tesla moved at all on this is kind of surprising because $200 million, even if Tesla has to pay that, is nothing. Like, who cares? But Elon Musk does say that Tesla will appeal this ruling. And you can see that here. Elon Musk says that Tesla will be appealing the ruling. But what I take note of is the underlying strength in Tesla stock relative to these other big tech stocks. Like, seriously, even considering you were down 1.83%, that was better than, again, Amazon, Meta, Apple. That was better than, pretty comparable to Microsoft. That was better than Nvidia, right? And again, at one point, Tesla was almost green. That is a sign of strength. And you want to pay attention to those, especially when people do get fearful. And especially when you do see a broader market sell down like we had. Now, this may not be a surprise to some of you, but hedge funds and institutions have been buying a lot of bullish option activity in Tesla. It makes sense why they are doing this because expectations are through the floor for Tesla. Nobody's bullish on Tesla. Everyone's bearish. Like, expectations are at a very low point. So just logically speaking, it's going to be easier for Tesla to surprise to the upside. Maybe that's better than expected deliveries. Maybe that's better than this year. Maybe that's better than expected deliveries next year. Maybe that is a groundbreaking, Model 2, or maybe that is a faster expansion of the robotaxi network, right? It can be many of different things. But now you're attractively priced in Tesla stock, where you're not pricing in things are going to be great, and people have very low expectations. So on Friday, you had hedge funds and institutions that placed 174 different options trades on Tesla, totaling $162.16 million with a positive order value of 59%. Okay, so 59% positive. That is more positive than negative. That is a good sign, especially on a day like we had yesterday, where people were fearful. I mean, where there was the biggest red day we've seen in 4 months. Okay, that's a very positive sign. You've also continued to see hedge funds and institutions covering on a lot of shares. Even on Friday, they covered almost 131,000 shares that they previously had sold short in Tesla. That's a lot. You've seen the short interest drop from over 3% down to 2.5%, which is a big drop for a stock like Tesla. That's $1 trillion company. You currently have $21.26 billion sold short in Tesla, totaling 70.24 million shares that are currently sold short. Now, also in the news today, a new $275 million Tesla Megapack battery energy storage system, pictured below, is expected to come online in California in January of 2026. The project by Aravon Energy will be a 300 megawatt, 1,200 megawatt hour system with the ability to power up to 385,000 homes for 4 hours each day. And a new $106 million Tesla Megapack BESS has just come online around Phoenix, Arizona. It can store enough electricity to power 200,000 homes for 2 hours each day. Aravon's CEO says, we've been operating Tesla Megapacks for a number of years and we've had zero safety incident. Fran Von Holsten on X says, celebrating 17 years of Tesla design today with many more to come. Cybertruck X account shares a picture of the Cybertruck and says, best one yet, if I may say so myself. Elon Musk commented the muscle emoji with a red heart, and there's many other senior executives also commenting on this as well. Tesla will also be opening its first ever supercharging station in India on August 4th in Mumbai. Now, the most recent AI investor sentiment survey that came out showed bullish investors at 40.3%, neutral investors at 26.7%, and bearish investors at 33.0%. So not much of a change, but you did see a rise in bullish investors in the last week. Of course, that was before Friday, so I'm sure the next week's numbers are going to come in quite a bit lower than what you're seeing here. You also have the CNN Fear and Greed Index, no longer in extreme greed, no longer in greed, but back to neutral. So the point I've been trying to make here is now you're only 2% off of all-time highs. I've been calling for this consolidation phase for the last 2 weeks now. Like, I'm not surprised we got a bit of downside volatility. Like, I've been calling for this for a while, but only like a 2 to 3% downside move, which we've already done. So I don't think there's going to be too much selling pressure ahead. I think it's something Wall Street is already probably getting over with. Earnings are coming in good. There's no reason to think they're going to collapse anytime soon. Sure, we got some bad revisions to the job numbers, but are they accurate to begin with? Like, how much weight are you really going to put on that, right? There's a lot of reasons you might want to look past some of the recent data. Now, if the recent data continues to get bad and look even worse, then that's where you have, a bigger problem on your hands. But again, you're back to neutral. So what if we get a 2% green day on Monday? Just bear with me. 2% green day on the S&P, back to a new all-time high. The CNN Fear and Greed Index might go to 70. It might go up 20 points. It might go back to the midpoint of greed. But you're not going to be in extreme greed anymore. You're not going to be, severely euphoric, as some people have called it, which I don't think this market has been at that pace, place. I think we could get there, though, heading into 2026 and into 2026, and we'll talk about that in just a moment. But I hope that helps explain, why I say it's actually positive that we had this red day on Friday. Now, I do also want to share with you what the options market is pricing in for Tesla stock by the end of this year. So basically, if you're buying these calls or these puts, you're basically betting that the stock's going to move more than what the markets are pricing in. But I think it's important to periodically look at what markets are pricing in and say, hey, are we expecting a big move into the end of this year? Are we not? Like, you know, what's the expectation? Okay. So here we can see you're pricing in about a 28% move, 28.5% move to be more specific by January 16th, 2026. So you're actually pricing in a decent move if we look at what that looks like for Tesla stock up or down. A 28% move to the upside puts Tesla stock in the neighborhood of about $389 per share by the end of this year, which I could obviously see that happening. A 28% move lower from here puts Tesla stock in the 216, 217 area. I don't see that happening. So I think the options are interesting right now. I'm surprised. I'm kind of surprised it's pricing in that much, especially to the downside, because I just don't see that. But hey, let me know your thoughts down below in the comment section. Now, Fed Williams said he would go into the September meeting with, quote, very much an open mind about cutting interest rates. There's a clip on CNBC from Kevin Hassett that says prices will rise due to these tariffs. You don't believe that? Kevin Hassett says prices have been falling month after month. Suppliers eat the tariffs. In the news, India will buy Russian oil despite Trump's threats, according to officials. New York Fed President John Williams says labor market remains solid even after unusually large downward revisions to job gains for May and June. Trump tells Newsmax that nuclear submarines are closer to Russia. Says he will appoint another Federal Reserve chair once Powell's term ends. And he tells Newsmax that Powell will, quote, most likely stay on as a chair, and Trump says that firing Powell would likely disturb the market. Again, Trump loves the stock market. He's seen what happened to the markets yesterday because of the non-farm payrolls revisions, and he went out and fired the head of the BLS before the end of the day, trying to calm markets down, basically saying those numbers were fake. If you don't think Trump likes the stock market or wants to see stocks go up, the Trump put is here. I think it always has been, but some of these things that Trump does is like, man, you really like the stock market, huh? You really want to see the stock market do well. And I think when you have a president that thinks like that, you don't want to bet against it. Because if Trump didn't care about the stock market, he would have fired Powell. And dealt with it in the courts. And again, Trump says he would have removed Powell in a heartbeat if it wasn't for how the markets would respond. Fed Kashkari says labor market is gently softening. That's a word for it. He says the BLS data and private sector data are the same thing. He says he is not surprised the labor market is slowing. And he says the Fed is committed to making the best decisions based on the best data, which, let's just be honest, it's not. They're speculating at this point. They're guesstimating. This is not a data-dependent Fed. It is a guessing Fed. Let's be clear about that. And Donald Trump did say as well yesterday that he wants to pay off debt. Now, again, just to kind of wrap up this video, to circle back to Tesla stock, I think Tesla could be over $400 by the end of this year. Now, sure, not all things have played out as according to planned. I was wrong about my expectations for robotaxi guidance. I thought we would get some kind of numbers thrown out by Elon. We kind of got some guidance, but it was a little bit weird, right? Elon said that half the population could be able to take a robotaxi ride by the end of this year or next year. It wasn't like 50,000 robotaxis out on the road like we like I was hoping to hear, but still, I do think sentiment is way too far negative. I think things are going to be a lot better than people think for 2026. And that's what Wall Street is going to start pricing in even more heading into the new year. With that said, if you guys would like to come join the trading community, check out that link down below in the description of this video. What we are doing over there is going out finding small cap stocks before Wall Street does. We have many examples of this. You've heard them before, whether it's Novartis, Nebius, IONQ, even HIMS, right? Applied Digital. We've done this a lot in the past year. Now we're bringing this service to you guys. Anyone that doesn't have the time to do the work to find these small cap winners, that still wants to participate in some of the large upside that comes about with the strategy, can now join that group, see the research, see the due diligence, see if you agree or not, if you want to make an investment or not. Always come to your own conclusions, not financial advice. I could lose all my money. You could lose all your money if you invest in stocks. Link down below in the description of this video to check that out. You guys have a great rest of your day, and I will see you in the next one.